Is Bitcoin the future of finance, or merely another speculative fad destined to fade away like countless economic experiments throughout history? To answer that fairly, one must explore the technological, economic, social, and philosophical forces that surround Bitcoin's meteoric rise, as well as the risks and uncertainties that still loom over it. Bitcoin emerged in 2009 during a time of collapsing trust in banks and governments. When people saw financial institutions fail, currencies inflated, and central authorities bail out the same corporations that helped trigger the global crisis. The mysterious creator, Satoshi Nakamoto, envisioned Bitcoin as a peer-to-peer electronic cash system beyond the reach of centralized control. Built on blockchain technology that allows transactions to be recorded transparently, immutably, and securely without intermediaries. Supporters argue that Bitcoin represents a financial revolution comparable to the Internet revolution in information. Instead of needing banks to verify balances or clearinghouses to settle transfers, Bitcoin enables ownership to be proven mathematically and transfers to occur globally within minutes, anytime, without permission from any institution. With a fixed supply capped at 21 million coins, Bitcoin cannot be inflated at will like government currencies, making it attractive as a hedge against inflation, currency debasement, and irresponsible monetary policy. Investors from the United States to El Salvador praise its ability to store value across borders, especially for people in struggling economies or authoritarian states where banking access is limited or monetary stability is uncertain. Meanwhile, large institutional players, hedge funds, publicly traded companies, pension funds, asset managers have gradually begun to treat Bitcoin as digital gold, a scarce asset whose value derives from scarcity, security, and network adoption rather than physical properties. The idea of decentralized finance evokes a world where individuals control their assets directly, without relying on banks that charge fees, extract rents, delay settlements, or sometimes restrict access unfairly. Yet Bitcoin's future remains uncertain, riddled with challenges and criticism from regulators, economists, energy analysts, and even some early crypto advocates. Volatility remains one of its greatest barriers to functioning as a reliable medium of exchange. Wild price swings make it difficult to price goods, plan financial activities, or use the currency in everyday commerce. Environmental concerns continue to fuel debate about proof-of-work mining, with critics arguing that Bitcoin wastes electricity, while supporters counter that it drives renewable innovation and consumes less energy than many legacy financial systems. Governments appear divided. Some fear Bitcoin could undermine monetary sovereignty, encourage illicit finance, or weaken tax enforcement, while others explore integrating Bitcoin into their economies or issuing Bitcoin-backed bonds. The question of scalability persists as the network currently processes far fewer transactions per second compared to global payment giants like Visa. But solutions such as the Lightning Network aim to enable fast, cheap, massive-scale payment channels built atop Bitcoin's base layer. Another critical factor is public understanding. Many people still view Bitcoin as confusing, speculative, or unsafe due to hacks of exchanges, scams, or dramatic crashes in coin prices. But these risks often stem from external platforms. It's not the Bitcoin protocol itself, which has proven resilient for over a decade without being hacked. As younger generations grow, increasingly distrustful of traditional banks and more comfortable with digital assets, Bitcoin adoption may expand naturally, especially in economies with inflation, capital controls, unstable banking systems, or weak rule of law. If Bitcoin were to achieve mass adoption, the global financial landscape could shift dramatically. Cross-border payments might bypass banks entirely. Remittances could become nearly free. Savings could be stored without banks or governments. Monetary policy could lose much of its power if people abandon inflationary currencies in favor of scarce digital money. Critics argue that Bitcoin will never scale to replace global finance and will remain a niche digital commodity rather than a currency. Others counter that Bitcoin need not replace all finance to succeed. It simply needs to offer a superior alternative for storing and transferring wealth. Similar to how the internet didn't replace the government, but transformed communication. The real question may be whether society wants money that is politically neutral, resistant to censorship, immune to inflation, and independent from centralized institutions that historically hold immense power over economic life. The future is uncertain, but Bitcoin forces us to confront fundamental questions about who should control money, how money should be created and distributed, and whether financial systems should depend on trust in human institutions or trust in cryptographic mathematics. Whether Bitcoin becomes the future of finance depends on adoption, regulation, technology development, cultural shifts, and global economic pressures that could either propel it to mainstream dominance or confine it to the realm of speculative investment. If inflation rises, banking crises intensify, or geopolitical instability undermines confidence in fiat currencies, Bitcoin may emerge not just as a speculative asset, but as a practical necessity. On the other hand, if regulation restricts usage, technological alternatives outperform it, or public sentiment turns against it, Bitcoin could decline into irrelevance. Ultimately, Bitcoin challenges long-held assumptions about money and forces society to rethink value, trust, and the balance of power between individuals and institutions. Whether it becomes the backbone of a new financial era, a digital reserve asset, or simply a memorable historical experiment, Bitcoin has undeniably changed global discourse about money. And the ongoing struggle between centralized authority and decentralized innovation will shape whether Bitcoin truly becomes the future of finance.